Hi guys, my name is John and welcome back to Talk Finance. I wanted to give you a quick update on SoFi Technologies that I'm sure you have already heard about, but in case you haven't, I will give you a quick rundown and tell you why this could be important. SoFi announced that they will be offering the opportunity to get FDIC insurance of up to $2 million on all bank balances to their checking and savings account holders. That's right, they are increasing their industry standard $250,000 per account that is usually insured by the FDIC up to $2 million. And here is the best part. They aren't going to charge its members for that extra insurance. They're instead allowing its members to opt in or out of the extra insurance. How are they doing this, you may ask? Well, the increased coverage is provided by allowing SoFi to seamlessly place members' deposits beyond the standard insurance coverage with specifically identified FDIC-insured partner banks. They also reiterate their usual promise that there is zero fees for SoFi checking and savings accounts, and there will be no fees to increase FDIC insurance coverage. Although usually I would say that SoFi would have to increase some costs to make up for the increase in insurance premiums, in this case I don't think it will because they aren't increasing the FDIC insurance for their bank specifically per se. They're instead doing all the work to have your money covered by distributing it to partner banks, therefore doing all the work of storing your money in FDIC insured banks while you are able to fund and withdraw your money from your SoFi account. This comes at a great time for SoFi as a number of people have been removing their money from smaller banks and consolidating it in larger banks. I know what you're thinking. Most of SoFi's customers most likely don't have more than $250,000 in their accounts. Most of the tech companies have their capital in banks like SVB and larger companies in banks such as Chase or Bank of America. But by being a bank that offers an FDIC insurance of up to $2 million, they will be able to provide three things. First, trust. The most important thing when it comes to banking. You want to know that the money you are depositing in the bank is money you are able to use at any time. Like if it was cash in your hands, and that you know it will be there when you are ready to use it. The second thing is that it will attract new customers that do have more than $250,000 in their accounts. Maybe even retired people that have most of it in their savings account and not invested. Or even customers that are holding a lot of cash because they haven't wanted to invest in the current market. And third, maybe it could attract small businesses and tech companies that might have more than $2 million in their accounts, but being able to diversify their capital in less banks yet insure it at the same amount could be very helpful to them. We also have to remember, and I'm not trying to advertise for them, but it is another benefit, is that they currently offer a 4% rate savings account APY as long as you have direct deposit. So they will get a better savings rate banking with SoFi than some of the larger banks while also being insured at a higher amount. What do you think about this move by SoFi? Do you think this will increase their customer count, or do you think it's a stunt to prevent current customers from pulling their money out of SoFi and consolidating it at a larger bank? If you found this video informative, then hit the like button and subscribe for more. See you on the next one.